real estate developers and sector. We have Mr. Sanjay Dutt, the MD and CEO of Tata Realty and Infrastructure, and Pankaj Kapoor, the MD at Liases Foras, joining us now to discuss the realty trends. Gentlemen, good afternoon. Thank you so much for joining us. Mr. Dutt, let me come across to you first up. Most of the companies, they've spoken about record high bookings in FY23. Is that it, or do you expect this momentum to continue and FY24 could even be better than FY23?
I believe this momentum will continue for some time, but that doesn't mean that the prices will keep going up. And if they continue to go up and the interest rate remain where they are or go up, then it may slow down. And also it is directly linked to supply. Supply used to be in 40 months, 60 months, and it's down to 12 months. Pankaj will have more data with you, but I think if the supply is under check and the development comes in the market, which the end users are buying or the investors who have come back to the real estate sector are buying, then I think it will continue and it's sustainable, depending on how the economy, overall political climate and investment climate remains.
Sure. Pankaj, would you like to give us an updated figure of the kind of supply the industry is sitting on? And if you could break it up geographically, because in real estate, every market is a market in itself. That's point number one. And the second question is, the real estate sales this quarter across the board have been phenomenal. DLF, for instance, on an average, their quarterly bookings used to be 2.5, 3,000 crore rupees. But in Q4, it jumped up to 8,500 crore. What explains the kind of, bookings that we've seen in Q4, according to you? The top three reasons.
Yeah, in terms of the supply, if you see the last year, we added 5 trillion rupees worth of new launches. And while my sales were only 3 million, so the supply has really been growing. And that's clearly indicating that it's going to be an end user market because supply is higher than the sales which is taking place. The builder's commitment is increasing. So I concur the point which Sanjay said that we don't anticipate the prices will go up. And the maximum increase in the supply has been in Mumbai metropolitan region, where the unsold stock has touched close to 360,000 units, which is historically highest. And all India level, if you see that we are touching close to 13 lakh unit, which is 60 cities and top 8 cities, close to 9.5 and 10 lakhs units unsold stocks. So the new launches is really dominating the market, and that is where the sales is coming. So if you look at the more the supply, the more the sales, the magnitude of the sales. So despite increase in the new launches and the unsold stocks, my month's inventory is still the same because we have seen the growth in the sales, and that is what is there in most of the developers books also. If you look at that, listed builders have done really very good sales during this period, and largely because there is a momentum in the market, and the prices have really started growing but haven't really grown at the speculative level. So the affordability and prices have the parities. Despite increase in the interest rates, I think there is a discounts and offer to really mitigate any kind of impact which interest rates would have really given to the market. And there is an investor participation started coming back, because after 16 years, we are seeing an upside in the property prices. So the prices are productive, sales has a momentum, new supply is pouring in, and that's what we are seeing, that the growth is there. And this growth looks to be continuous. I do not see the speculative price rise and high inventory regime is going to come back, what has been a phenomenon of the previous decade.
Okay, so in that case, Pankaj, what has it done to the inventory levels? Because you've spoken about sales primarily driven by new launches. What's happening to the unsold inventory or inventory in general? Has that increased as well?
It has increased. So it has, because the new launches are more than the sales which has taken place, and that's why the unsold inventory has increased. But the inventory overhang has not increased. So what inventory overhang is? My current closing stock of unsold inventory divided by monthly sales or yearly sales. Since the yearly sales and monthly sales has been gradually growing, so my month's inventory is more or less the same. But having said that, I disagree the point which Sanjay said, that 9 months of inventory, we still into 38, 39 months of inventory at top 8 cities, and it is holding on. So, and that's a basic reason. It is putting pressure on the supply is putting pressure on the prices, and that is where the sales are growing. So it's a buyer's market, and it is going to continue.
38 to 39 months of inventory, at least in the top 8 cities. That's quite a staggering fact, Pankaj. Sanjay, would you like to comment a bit on that? The kind of inventory that's being built up. And at what point do you think these new launches will slow down? Because inventory is clearly plentiful. Do you think if we added 5 trillion of new launches last year, as Pankaj was telling us, what will the number look like in FY24 according to you?
We have seen 15 to 20% growth if we launch the right product. The point that I wanted to make as a compliment to what Pankaj said, in the last decade or so, we have seen all kind of inventories being launched. I think during the correction period and the COVID period, the developers have learned what inventory to launch. And therefore, the inventory that is being launched today is doing better. And you're seeing the results. And I think that is what differentiates, in my opinion, and I believe that's how the demand will be sustainable, because the knowledge and insight has gone up. To answer your earlier question, I was saying 12 months of inventory, of ready-to-move inventory, not just the supply which is coming up. I agree on the supply side with Pankaj. There is so many new launches are being launched, so that's going to go up. But I also believe the demand will remain. Should we start doing launches of uber luxury, simply to, offset the rise of cost in construction and keep the prices up? And that's the time when you will see a slowdown.
Okay, it looks like there's some technical error there, but Pankaj, let me come to you on that one. The big word that we've been using during COVID is consolidation, especially happening with the bigger players, right? They are buying smaller players. But recently it was also said that at least in tier 2, tier 3 cities, the smaller developers are also making inroads. What is your take here?
I always disagree to the stories of the consolidations in the real estate sector. It's a local subject. You don't really see too much of consolidations, only certain large players. So if you look at in my data, we capture the data across 60 cities in India. There are around 10,000 odd developers which have been functioning, which have the marketable supply. And during the COVID time, we have seen only a marginal decline of 7-8% of some of these smaller developer, very tiny, the one whose commitment is more than 3 lakhs units, 3 lakhs square feet during a financial year and things like it. So there was a bit of a reductions in that. And then after the momentum which has come back in the market, I see there are smaller and the mid-sized developer has started coming back. So apart from the listed developers and some large developers, we are not seeing too much of the consolidations in the real estate markets. It's like we are seeing increasing number of smaller developer, mid developer, and so as the large developers also are increasing in the sizes. So other than the Godrej and the Prestige and DLF and some of these listed developers, if you name them, it will not be more than 20-25 developers. Rest all the industry is dependent upon the smaller developers. And so if you see the large developer and super large developer across India whose supply magnitude is more than 1.5 million, they are just 500 or 600 developers, and they contribute 33% of the market in terms of the sales in units. So if you look at in that point of time is perspective, also around 66% of the markets is dependent on small and the medium-sized developers. So right. I disagree to the point that there is a consolidation and the whole sales are getting polarized to the large developers. There are in the current market, the product is selling, price is selling.
That's right. Yes, and that's a different view, and we appreciate you being so candid about it. We would have loved to chat a little bit more, but completely out of time. Mr. Dutt, Mr. Kapoor, thank you so much for joining us here on CNBC-TV18 and analyzing the real estate sector and telling us what's next for the sector, which has been buzzing in trade and